Okay. What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to do some stock analysis for Pinterest stock because the stock just fell over 20% after they reported earnings. It doesn't really make a lot of sense because the earnings are not that bad. They did not miss by that big of a number to what Wall Street was expecting. Their numbers actually look pretty good. Like the net income, the revenue, the number of users on the platform, all are doing fantastic. And I'm going to show you the charts. I'm going to show you everything they reported. It looks pretty good to me. I'm still considering buying it. I need to think about it a little bit more, but it's very possible that I make a position. So here's the stock down 21% today and pretty much at a 52-week low because back in April, the stock was also at about $24, $25, and we're back to that point. But just a couple months ago, the stock was at about $40. And over the last 5 years, this is also an important point. Since 2022, the stock has basically been around 25, $30, right? So it's basically flat. However, we look at their numbers here. Look at their numbers from 2022 to now. 2.7 billion in revenue to now 4 billion in revenue. Okay? Net income at that time, that whole year, they were losing money, hundreds of millions of dollars. To now $2 billion in net income. Not to mention, look at that margin right there. We're talking 1.9, 2 billion, around $2 billion of bottom line net income off of only 4 billion in revenue. That's insane, right? Now, to double check that though, if we go to our profit margin here, we could see that yeah, that's right. So 2024, 51% profit margin. That's insane. That's incredible. Then we look at their cash to debt. I like to look at things on a trailing 12-month basis to keep it up to date, and it helps you compare stuff nicely. Look at the cash and the debt. 2.6 billion in cash, 200 million in debt. That's phenomenal, especially 2.6 billion in cash. This company is only 17 billion dollars of evaluation. The PE right now is a 13, right? Price to sales of 4. Everything looks very nice for this company. Look at free cash flow. The last 2 years, it's been in a super nice uptrend, right? Over $1 billion of free cash flow. Okay, shares outstanding. It's moving a little bit, but basically flat. So really not much to pay attention to there. What else? We're looking at, okay, analyst estimates of $1.75 for EPS this year and then 2 next year. That sounds good to me. What does it say for Yahoo Finance? Yahoo Finance has the same 1.7. Look at 1.3 last year, 1.7, and then 2. That's good enough growth for me. 15, 16% revenue growth, good enough for me. You're only paying what, 13 times earnings? You're only paying 12 or 13 times earnings. That's a really good um those are really good numbers. Then we have the company said fourth quarter revenue will be 1.31 to whatever, 1.3 billion, trailing the projections of 1.3. Like we're talking, pennies here. We're talking nothing. We're talking not even we're talking a 1% difference. It's like earnings per share 38%, 38 cents. Sorry, 38 cents adjusted, they reported, versus 42 cents. A very tiny miss. Revenue pretty much came in right on point, right? Third quarter sales grew 17% year over year with net income at $92 million, up 200% from just a year ago when they only did 30 million. That's a phenomenal improvement. Then let's keep going down. What else? Okay, here we go. Super important. 600 million global monthly active users. That's incredible. Ahead of the 590 million that the street was projecting. They beat on that. That's a very important number, and they beat on that. The stock's down over 20%. In August, they reported 578 million for the last quarter, and they've added, what is that, 32 million people just in the last couple months. That's incredible. And we're talking what? That's let's see, what is there? Almost eight. There's 8 billion people on planet Earth or something. So we're talking almost 10%, 8%, 8% of the population. That's a lot. The company logged 300 million in adjusted earnings before. So EBITDA was 300 million. And that was higher than the street's estimates of 295. They beat on that number. Makes no sense. We're talking a low valuation for this stock, um, an insane amount of users that are still growing. Net income is through the roof compared to where it was the last couple years. And the stock is not only down, but it's basically trading at the same price it was back in 2022. So again, I think I'm going to buy this. Global average revenue per user, $1.78, less than the, oh my God, wow, $1.79 the street was projecting. What a huge difference. The CEO says our investments in AI and product and innovation are paying off. We've become a leader in visual search and have effectively turned our platform into an AI-powered shopping assistant for 600 million consumers. That's incredible. The finance chief said that they are experiencing pockets of moderating ad spend. Okay, that makes total sense. I think it goes back to the tariffs, right? Some large U.S. retailers dealing with tariffs. Okay. What else do we have here? This probably has something to do with the drop too. Tech giants Meta, Alphabet, and Amazon reported the most recent blah 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 and showed strong digital advertising sales. That's great. Those are different platforms. So those are bigger and they're used for different things. They're probably a lot of companies probably pick those three over Pinterest. So those are in a different boat. Meta, okay, I don't care about Meta, blah blah blah. Reddit said that sales ballooned 68%. Okay, that's great. We're not talking about Reddit either. So I like it. I really like it. The other thing I like to check here is Robinhood has what are Robinhood users doing? Last couple weeks, we see people buying. Last couple days, I should say, people buying. I actually feel bad for them because the stock just fell. Hedge funds mostly selling for the past couple months, and insiders pretty much nothing. Right? There's a couple sales into the summer, but that was it. So I like it. I like what I see here. I mean, what's the worst that can happen? Is the stock going to go to $15 again or something? I mean, if the stock goes to $15, what like you'd have to be, I don't know, you'd have to not be thinking straight to sell the stock off to $15. I think this stock should be more in this $40 to $50 range. That's where I see it. So I think I'm going to make a position. Why don't we do it live on the video too? I'm looking at solid growth, 15 to 17% growth. I'm looking at EPS expected to grow. I'm looking at an extremely low valuation. They're about to do $2 EPS. I'm paying, let's say we'll call it 13. I'm paying 13 times earnings, okay? And this is with me predicting that we're going into a short bear market or a correction over this season, okay? There's certain stocks like this and Salesforce and stuff. I feel comfortable buying this. Again, the revenue trend is super nice. I am not concerned. How can you be concerned with that trend? Net income, this is a bit weird how it jumped from 200, they 10x their net income in a quarter, and then they kept it there for the whole past 12 months. That's kind of weird to me, but definitely not a bad thing. Free cash flow looks more normal. That's great. I might have to do some investigations into what did they do? Why was it negative? Then they turned profitable and then it skyrocketed 10 times. That's weird. But beautiful. I love this. I like seeing lots of green, little bit of red. Okay. I'm not a big debt person. I like cash and flexibility. So that's what this company has. 2.6 billion in cash. That's really nice. What else do we see here? Yeah, expenses are rising. Let's see. What's the average? The last 5 years, we're looking at I don't even know what this chart is telling me, but it looks like it's all that matters is the numbers look good. I don't even care if insiders are buying. I bet you insiders. I wouldn't be surprised if insiders bought. Now let's buy some shares here live. Okay, let's buy what 50, 60 shares to start. Let's go with 60 shares. Okay, we'll start with $1,500 here. Sometimes when the stocks get these big drops, they continue to fall for another. Could be weeks, could be months, right? I don't think it'll be a year. I think the stock will recover within under a year, but it could be this stock could possibly downtrend a little bit more, maybe approach $20 a share, but even that is like, to me it's already to the price point where it's like, okay, it's kind of at a ridiculous price. This company isn't a Meta or something, but I mean, if Meta had these numbers, the stock would be at 25 times earnings. So let's buy some shares here. Okay. So buying some Pinterest. I'm happy with this. I don't even feel like this is a risk, really. I do not feel like this is a risk. Okay, well, that's the end of the video. Thank you for watching, and I will see you guys in the next video. If you guys are buying Pinterest, please let me know.